In recent months, the price of Bitcoin has skyrocketed, setting new records and breaking old ones. Even still, several experts have expressed concerns about the cryptocurrency's trustworthiness and durability in the long run, despite its meteoric rise. Michael Saylor, co-founder and executive chairman of MicroStrategy, spoke about the state of the Bitcoin market and the current banking crisis in a recent Twitter Spaces debate. Saylor acknowledged the COVID-19 pandemic's impact on the current global banking crisis, which drove central banks to inflate trillions of dollars globally. He claimed that because so many people have turned away from fiat money and towards alternatives, there is currently a trust issue with traditional finance. Litecoin, which offers a decentralized, safe, and inflation-proof repository of wealth, is one such option, according to Saylor. Saylor shown that there have been 11 such crises since the Terra Luna collapse last year, demonstrating that the cryptocurrency sector is not immune to trust issues. He asserted that the entry of novice investors into the market and the growing complexity of the Bitcoin ecosystem were the primary causes of earlier crises. Saylor remained optimistic about Bitcoin in spite of this, claiming that it had survived these turbulences and come out stronger than before. Saylor's belief in Bitcoin is partly a result of its fixed supply. Bitcoin has a finite supply of 21 million coins, in contrast to fiat money, which can be created by governments indefinitely. Hence, it is intrinsically deflationary and will eventually get scarcer. Because of its scarcity, Saylor claims that Bitcoin is a great way to hold money, especially when the economy is shaky. Saylor also brought up the expanding institutional use of Bitcoin, noting that MicroStrategy had already made a $2 billion investment in it. He predicted that over the next few years, institutional investors will continue to perceive Bitcoin's worth as a safeguard against inflation and economic instability. Saylor did admit that the Bitcoin business was still dealing with serious issues. One of the biggest issues is regulatory ambiguity, which results from the fact that many nations find it challenging to establish precise rules for the usage and taxation of cryptocurrencies. Saylor stated that this ambiguity was deterring investment in the industry and suggested that governments adopt more proactive regulatory measures. The expanding environmental issues connected to Bitcoin mining are another difficulty the Bitcoin industry is experiencing. Saylor agreed that Bitcoin mining was energy-intensive and has been connected to global warming. He asserted that this was mostly untrue and that the adoption of renewable energy was actually fueled by Bitcoin mining. Saylor claims that because Bitcoin miners are rewarded for adopting cheap and renewable energy sources, new, cutting-edge renewable energy technologies are being created. Overall, Saylor had a positive outlook on the current Bitcoin boom and the current global banking crisis. He believed Bitcoin to be a reliable alternative to conventional finance that could withstand any upcoming confidence problems. Before the Bitcoin business could realize its full potential, he admitted that there were still enormous challenges that needed to be overcome. Interest in the cryptocurrency market has been rekindled by the ongoing global banking crisis and the recent rise in the price of Bitcoin. The recent Twitter Spaces debate between Michael Saylor and Scott Melker emphasized both some of the major difficulties the sector is currently facing and some of the factors that have contributed to its recent success. Despite the industry's many current difficulties, Saylor's optimism and conviction in Bitcoin imply that it might have a bright future. Watching how the Bitcoin market evolves and what effects it has on the national economy will take some time. Recent years have seen a number of financial crises that have impacted numerous businesses. Financial catastrophes, ranging from the 2008 global financial crisis to the COVID-19 pandemic, have significantly impacted the world economy. A number of crises that have impacted the sector's various segments have resulted from the emergence of cryptocurrencies, which has presented the traditional banking sector with new issues. The realm of Bitcoin derivatives is one of the industries impacted by the difficulties with cryptocurrencies. Financial products called crypto derivatives derive their value from cryptocurrency. They are employed to control risk and give traders leverage. Yet, a number of crises, including market manipulation, liquidity issues, and flash collapses, have plagued the market for crypto derivatives. For instance, the value of Bitcoin derivatives was dramatically reduced by Elon Musk's tweet concerning Bitcoin's energy use in May 2021. As a result of the collapse, traders incurred significant losses due to the liquidation of leveraged bets worth billions of dollars. Also impacted by the issues are Bitcoin banks. Financial organizations known as crypto banks provide banking services to users of cryptocurrencies. Among the services they offer are savings accounts, payment processing, and loans. However, crypto banks have encountered difficulties, including as security issues and legal restrictions. For instance, in 2018, $534 million worth of bitcoins was stolen from the Japanese cryptocurrency exchange CoinCheck. Investors withdrew their money after the occurrence, which damaged their confidence in the cryptocurrency banking sector and led to a market meltdown. Cryptocurrency-focused hedge funds have also experienced issues. Investment firms known as hedge funds employ a range of methods to provide their clients with substantial profits. Hedge funds have suffered large losses as a result of their failure to make accurate predictions due to the volatility of cryptocurrencies. For instance, the unfavorable market conditions caused the hedge fund Altcoins Partners to lose 40% of its value in 2018. The economic crisis has an impact on trade on the Bitcoin market as well. For financial gain, trading procedures include purchasing and selling Bitcoins. Making precise predictions, however, has proven to be difficult as a result of market volatility, which has resulted in huge losses for traders. As an example, the market for cryptocurrencies had a spectacular collapse in January 2018 that resulted in losses of billions of dollars. Exchanges for cryptocurrencies have also run into a variety of problems. Websites called Bitcoin exchanges make it easier to purchase and trade Bitcoins. A wide range of issues, including security holes, technical issues, and regulatory restrictions, have had an impact on the exchanges. For instance, a robbery of $460 million worth of Bitcoins from the Mt. cryptocurrency exchange occurred in 2014. The incident caused the exchange to go bankrupt and badly damaged public confidence in the Bitcoin industry. Another issue is staking, which involves holding cryptocurrency to authenticate transactions on a blockchain network. Those who save their money and provide security to the network are rewarded by staking. Staking has, however, run into problems with network centralization, security vulnerabilities, and governance. For instance, the governance architecture of the blockchain network EOS in 2020 garnered criticism for its centralization and unequal distribution of incentives. The cryptocurrency issue has also had an effect on the securities settlement networks that aid in the settlement of securities transactions. These networks guarantee the quick and effective settlement of securities transactions. However, as cryptocurrencies became more well known, the securities settlement networks faced additional difficulties, including the requirement for fresh settlement protocols and the possibility of fraud. For instance, the Securities and Exchange Commission, SEC, filed a fraud complaint against the blockchain company Litecoin in 2017 for making misleading claims about the support of real estate properties. Stablecoins, which are digital currencies linked to a reliable asset like the US dollar, have also been called into doubt regarding their dependability. The growth in popularity of stablecoins can be attributed to their ability to serve as both a reliable medium of exchange and a store of value. Stablecoins, however, have a number of difficulties such as legal restrictions, worries about counterparties, and the potential for a lack of transparency. For instance, Tether, the largest stablecoin by market capitalization, has come under fire for its claims of being completely backed by US dollars and lack of transparency. Stablecoins have additionally been charged with putting financial stability at peril if they become extensively used as a form of payment because their value is vulnerable to market shocks or a rapid drop in confidence. Stablecoins are still a significant innovation in the cryptocurrency world despite these difficulties, and many are interested to learn if they can provide a reliable and effective method of payment. Stablecoins may be important in the financial future as the world continues to embrace digital currencies. In conclusion, the development of cryptocurrencies has presented further difficulties for the conventional finance sector. Stablecoins, hedge funds, trading operations, exchanges, and crypto derivatives, among other things, have all been impacted by a variety of crises that have hit the industry. These issues have caused huge losses and a decline in confidence in the Bitcoin sector. But as Michael Saylor noted, the UK bond debacle shows that even the conventional finance sector is susceptible to disasters. Participants in the industry must be alert and adaptive, given how swiftly the financial sector is changing in order to avoid any calamities. The only way the finance sector will be able to weather the storms and continue to prosper is with proactive measures, a dedication to openness and responsibility.